Hey, good morning, everybody. Welcome back to the Mic Drop Show, and I'm Mike Morawski, your bounce back coach. Hey, if you're new to the show, just so you know who I am, I've been in the business over 30 years. I'm an author, speaker, coach, owner, operator, investor, creative investor, and I try to bring as much content to you as I possibly can to help you grow. I wanted to do something a little bit different this morning and kind of join in a little bit of holiday celebration. So I hope that you are in the season spirit, and thought that we would sit in front of a little bit of Christmas decorations and hope that you are going to get to spend some good quality time. But most importantly, I hope you're finishing the year off really strong. As we get down to the last few days and, what's left, 15 days, 14 days left in the year, are you going to finish strong? Are you looking at what you're going to do in 2026 and committed to your goals and where you're going to head next year? I've kind of done some new things this year in my goal setting and have really focused more in on what I really want to achieve. And so, I've kind of taught that to people too. A couple of weeks ago, I did my annual goal setting and business planning session. We had a great turnout, a lot of people. And it was interesting because I did a lot of follow-up with people and talked to people afterwards and really just tried to hone in on what their goals were and what they were trying to accomplish in the coming year. And, people are thinking a little bit bigger for 2026. So certainly hope that you are as well. And, if you want to have a conversation or I can help in any way, don't hesitate to reach out. So here on the Mic Drop Show every week, we either bring a guest or you listeners throw me a bunch of questions throughout the week or on my Inner Circle coaching program. And this week I have a bunch of questions. So we're going to dive into some of those. But, I think that there's some things that investors miss, about real estate. Real estate doesn't reward effort as much as it rewards your alignment with what you're trying to accomplish. Finding the right deal, the right market, the right terms, and the right timing. People have said for years, hey, can you time the market? And, I don't believe you can fully time the market, and I've always said you can set the timing by, it doesn't matter what interest rates are, if they're too high, too low, if they're who's in political office, it doesn't matter. I've made money on both sides of the aisle with that. But right now, when we talk about timing, where we're at in the market cycle, if you look at the fundamentals and you look at things like unemployment, GDP, you look at interest rates and how things are starting to shift. If you're waiting for the mainstream media to tell you that the market has changed, let me bring you a message this morning. If you wait till mainstream media tells you that the market is shifted, then you're 2 years too late. Right now, watch the fundamentals and see where we're headed. Now is the time to get involved in real estate, either as a passive investor or as an active investor. I spent years thinking more about that the hustle it would help fix bad deals, bad deal structure, but it's not necessarily true. It's not always the hustle, it's the structure and it's the timing. Structure will fix, certain things. Timing fixes certain things, but you have to be aligned with all of that. So this show exists to help you see deals in a different way, in a different light, a different way to experience real estate investing. We're all honed into traditional real estate investing. And I think that if you shift your thinking a little bit from traditional real estate investing to creative real estate investing. And what do I mean by creative real estate investing? Terms are huge. And how do we structure deals to have great terms that allow you to control more real estate, not necessarily buy it and own it, but control it. It eliminates risk, gives you more flexibility, helps you gain more momentum in building your portfolio. And that's one of my big pivots and my big shifts in the coming year. So what are you going to shift on, and how are you going to make some changes and expect a different outcome? I bought hundreds, thousands of deals over the years, hundreds of single family properties, thousands of multifamily properties. And we've done a lot of that traditionally, but I've also done quite a bit of it. Historically, I've done that creatively, where, and when I talk about creative, maybe you've heard of seller financing, owner financing, maybe you've heard of land contracts, rent to own, subject to, wrap mortgages, all of those. But I teach one technique. I wrap that into one blanket, and I love it. I've used it over and over again, to buy single family, to buy multifamily, everything from 4-unit to 400-unit apartment complexes and a lot in between. So let me play Santa Claus for you a little bit and bring you some gifts that you can use as tools to put into your toolbox to help you in 2026 grow your portfolio and do a lot more. So some of the questions that we got this week were, what separates a deal that looks good from a deal that lasts? Wow, that's a really loaded question, really active question, right? So deals are structured in a way that I always look at as a win-win, a win for the seller and a win for you, the buyer. And how do you make that deal work for both sides where everybody gets rewarded? If you have deals that you structure well and you have great terms on them, those deals can last for a long time. Part of real estate ownership is the longevity that you own that piece of real estate. A lot of us get into deals, and a lot of those deals we get into are, 3 years, 5 years, 7-year deals. But I've met a number of people over the last several months who've owned the same piece of real estate that they bought their first property, 30, 40 years. I have a friend, Joe Holmes. You might know him. He's got a great podcast out there. He's been on my show in the past. And Joe owns a piece of real estate he's owned for over 40 years. He's been in and out of that property a number of times where he has recapitalized the property, pulled cash out. When you take a property that you've owned for 5-10 years, you refinance it, you pull cash out on a cash out refinance, you pull that money out tax free. Now, if you're somebody who's looking to make cash flow, to create long-term wealth, and to not pay taxes or pay less taxes, I heard Tony Robbins say years ago, it's not a matter of wanting to pay taxes. It's just a matter of wanting to pay what you rightfully should pay, right? We all overpay in taxes, 30, 40, 50% in taxes, and double taxed in a lot of situations. How do we eliminate that? How do we cut that down and keep more money in our pocket, right? That's what's important. Another question here is, how do we simplify deal structure without losing protection? That's a great question. I think that deal structure and protection run hand in hand. You have to look at them both the same. When you are structuring a deal, you want to make sure that you're protected. And you do that through LLCs, through trusts, through asset management, through long-term asset planning, and how do you hold that real estate? How do you control that real estate, and what type of an entity? So those are all things that you need to talk to your attorney about, talk to an asset protection attorney about. Talk to people who have been in the business for a while, and what are they doing to structure their assets that they buy. And when you're purchasing a property, that structure is really important. I talk a lot about control and not so much ownership, right? But even in the control, you can have ownership. and you can have enough ownership that gives you the ability to, take advantage of taxes, take advantage of cash flow, to do whatever you want with that property, but you don't have traditional financing in place. And how much real estate could you buy this year if you didn't have to go get a mortgage every time? So maybe you don't have good credit, maybe you don't have any money, maybe you don't have any experience. Well, there's ways that you can structure real estate deals that you can be involved and you can be part of that. And so how can I help you get there, right? Hope you have your coffee this morning. Here's a great question, and I love this because this has come up over the last couple of weeks that I've done some questions with people and in my inner circle program. But what tells you a seller values price over terms? I think every seller values price more. When we start to look for deals that we can do creative financing with or creative structures with, properties that haven't sold, that have been on the market for a while, that a seller wants to sell, but he can't because he's overpriced. That tells me that he values price more than anything else. So if I can go to a seller and give him his price or give him more than he wanted, short term and long term, but I can get great terms, that's a great way to structure a deal. So let me give you an example, and I'm going to make these numbers up. But let's say that we have a seller that, has got a property on the market and he wants $100,000 for it, just for simple math. And the property's only worth 85. Well, I would even be willing to pay $100,000 for that property if the seller would let me have control of that property for the next 10 to 15 to 20 years. Because the longer I can create terms and the better those terms structure, give the seller what he wants. This creates that win-win situation. So give the seller the $100,000 he's offering you, but get a low interest rate, get longer terms, get more control of the asset. And this gives you the ability to do things with that asset that will create more income along the way and long term. So, the longer those terms are, the better position you keep yourself in. Another part of that question is sellers looking for certainty, certainty that you're going to be able to execute on that deal. Well, if you're a new investor, you can always partner with somebody who's got experience, and that experience for the seller creates certainty. If you were to say, hey, Mike, would you partner with me on this deal? And the deal looked like it made sense. The market looked like it made sense. And I came to the table and I could tell the seller, hey, I've owned and operated over 200 single family properties. I've owned and operated over 8,000 units. I've had some ups, I've had some downs, but here's where we're at. Here's what the business plan is. Here's how we're going to execute this. Do you think that seller might be a little bit more interested in doing business with you? So if I can help you bring that across the table, and it doesn't have to be me, it could be anybody else that that's got some experience and some knowledge in the business. Here's another thing. What assumptions deserve pressure before signing? Well, I think that's a loaded question. There's a lot there to unpack. But, some of the assumptions that deserve pressure before signing is interest rate, loan to value, underlying mortgages, payments, who participates in the upside of the deal, who participates in the cash flow, who's going to be responsible for any capital improvements, who's responsible for leasing and tenant retention. So, these are all things that get laid out in a business plan, right? So they're all things that get talked about along the way by the buyer and by the seller. So talk about, somebody asked, what's some good framework around a deal structure? And, I think that that's a really great question. What is the framework? Well, I do a master class, about once a month. I've been doing it right now. I actually have a master class coming up on December 29th. So if you're interested in, putting some more tools in your toolbox or just getting a little bit more knowledge, you can sign up for that master class. We'll drop the link in the show notes, but you can go to masterclass.multifamilyinvestmentsecrets.com. Get registered for the master class. It's free. It's a couple of hours. We'll spend a couple hours Monday after Christmas just going through some structures. But I teach one technique, and that's a master lease technique. And what that allows me to do, the framework behind that is I have complete control of the property. I also have first right of refusal when, if the seller says, hey, I want to go sell the property. So I have protection in that acquisition. So it really gives me the opportunity to have complete control, manage the cash flow, manage the tenant base, manage the repairs, put capital in, refinance, take the seller out, first right of refusal. Seller can't sell the property underneath me. Gives me the advantage to have the tax benefits, and do what I want. We can talk in terms about what we're going to do with those tax advantages. Does the seller get any? Do I keep them? Who retains them? Do I bring investors in? Do partners, do they get tax advantages? So there's a lot there in the framework that is in this master lease that all gets outlined. But the biggest component of it is making sure that you have a PSA, a purchase sales agreement, that gets executed at the time the lease is signed, and you have that first right of refusal, call it, on the purchase. So, and I love this last question, and I'm going to land the plane this morning, or the sleigh, I should say, with this one. But what small daily actions compound investor credibility? You know what? The daily actions that as an investor you need to take on a daily basis are, looking for deals and having seller conversations and putting in offers and continuing to do that every day. Your confidence builds, your knowledge builds, your creativity builds, your structures build, your framework builds. That creates more credibility. The more deals you do gives you more credibility. If you're someone brand new and you don't have a lot of credibility, well, partner with somebody who does. But don't just partner with anybody. Make sure you're making right choices and decisions on that partner. Is it somebody that you would, go on family vacation with or have to your house for a barbecue on the weekend, right? Those partners of yours. I remember when I first got in the real estate sales business, I had a broker tell me, he said, look, you have no experience, you have no credibility. There's no way that you can convey in that seller exactly what you can do for them. So use the office statistics. Hey, last year we sold X amount of listings. Last year we had X amount of listings sell versus listings not sell. Last year we did this much in volume. So use the credibility of someone around you. Just like when when I first got in the business, I got mentored and had a coach that was really successful. And he said to me, look, when you're going to build broker relationships, those brokers don't know you right now in the beginning. So tell them that you know me. So it doesn't matter who you call, but you call that broker and you say, hey, I'm working with, John, and he said to call you. And those brokers, all of a sudden, because it's a third party referral, it's the same thing with the seller. It's the same thing with buyers. Because of that third party referral, you instantly build some credibility, and that's what you're trying to do. So I hope this morning's been helpful. Boy, I just want to wish you and your family a Merry Christmas as we're coming up. I probably will go live next week, next Wednesday's, Christmas Eve, and I'll probably go live just hanging out, doing a little bit of work in the morning. So if you're around, don't hesitate to chime in. If you have questions, you know what, drop them in the DM, email me this week. I always love your questions that you bring because it helps somebody else learn. And I never feel like there's a dumb question. So any question moves, and we'll get it answered. We might not get it answered on next week's show, but we'll get it answered on a future show. So make sure you're turning in. If this is your first time listening in this morning, I hope you got something here this morning. Buckle up. Every week is something different, but we're really going to focus in 2026 on creative financing and creative structures on real estate, because you can buy any kind of real estate with these structures. So it's a tool for your toolbox, and let me help you build your toolbox in 2026 and help you have more creativity, more ideas, more thoughts. And when you have a deal and you're trying to structure a deal and you bounce it off of other people who are involved in a small group or a small coaching group, that gives you the ability to learn creativity and be more creative. And that's what we want to do for you. So that's our focus moving forward in 2026. So more sessions coming up, tight rooms, clean strategy, practical execution. So pay attention to how you think outside the box, think creatively, think visionary, right? Look forward. What are you going to do down the road? Don't trap yourself. We'll see you next week. And listen, if this was helpful this morning, please like it, love us, subscribe to our content on Instagram and YouTube, subscribe to our channels, because we're always bringing a great guest on our podcasts, Multifamily Unplugged. We're bringing great question and answer on the Mic Drop show on Wednesday morning. So everyone, have a great Christmas. Many blessings to you and your family. I hope that the new year coming up is going to be super strong for you and a big win for you in 2026. Let's get connected. Let me know how I can help you along the way, and I will look forward to talking to you soon. Thanks, everyone. Have a great week.